Well, guys, we got a lot to talk about this morning. We got some big news. We got the unemployment rate coming out this morning, guys, and it ain't good. It ain't good. It's good if we were like in a bottom of a recession and you want to see the signs of a recession ending, but we're heading into the recession. We're not just heading into the recession. We're heading into a recession that is completely forced upon us. Man-made recession. Of course, they're all man-made, but this is like created by the Fed by design to kill inflation. But I'll just jump into it. We got our unemployment rate numbers, and the unemployment rate fell from 3.7% to 3.5%. They had it projected at 3.7%, so this came in hot. This is bad. This is like inflation. So that's the equation that the Fed are that's what they're using. That's part of their equation to bring down inflation is by raising unemployment. So X plus Y equals Z, basically. Inflation plus unemployment equals pain. And they are trying to bring both of those things, well, bring one up, bring unemployment up while bringing inflation down. And the reason that that's what they're trying to do is because when unemployment does come up, that reduces the amount of money in the middle class, the amount of demand. That's ultimately what they're trying to do. It's sad because they're basically trying to kill the middle class. No one goes around being like, "Hey, CEOs, maybe they should take a job cut." No, it's always us little people that are down here grinding in the dirt that they have to bring the pain to because we're the ones who make up the majority of the buying power. And none of these CEOs, they're all saving their cash. They're not out there buying their groceries and stuff. I mean, they are, but like just do the math. There's way more people in the middle class, a lot more money in the middle class. So that's where they have to direct their focus is unemployment. And unfortunately, they're trying to bring it up through very aggressive rate hikes. They're just trying to bring pain to the economy. They keep saying that's their nice way of saying. They always say the labor market is very tight right now, and that's a nice way of them saying that we are trying to make people lose jobs, and it's not working. Unemployment went down, so this puts a nail in the coffin for the market basically. It guarantees us that we're going to get our 75 basis point hike in November, and now the market's already looking past that, looking at December and looking at what could we get there. I think the market was praying for 25 basis points by December, but Fed, I mean, if we see a hot inflation number in CPI this month with this unemployment data, I mean, the Fed could be looking at two more 75 basis point hikes, which would ultimately, I'm pretty sure we are at, what are we at? Yeah, we're at 3.25. So 75 would bring us to 4. Another 75 basis point hike would bring us to 4.75, which is super crazy aggro hiking. Just easily the most aggressive Fed since the 80s. It's not even close. Looking at the Fed funds rate, you can see back here where they jacked it up from 1% in 2004. Over the course of 2 years, they brought it to 5.24%. So we are basically almost doing as much pain, but in half the time period, and in a market where there are many other dire uncertainties. So and then back in 2016, where they slowly started raising the Fed funds rate over the course of 3 years, they brought it to 2.5%. But then that was too painful in 2019 that Powell dropped them back to zero because Trump basically forced him to. Um, so this sucks. This ain't good. Then we see average hourly earnings rose 5% from a year ago, which is below estimate. So that's good because prior to the pandemic, on a month-over-month basis, so let's get to month-over-month. On a month-over-month basis, prior to the pandemic, um, the average monthly wage increase was 0.1%. Pre-pandemic norm. So wages are still climbing way higher, way quicker than they should be. But it's still inflation still is outpacing the wages. So That's another thing the Fed is trying to do. They're trying to slow down wages, so there's less money out there, less demand. This is how they kill demand. This is the pain that they're talking about. They're talking about wages slowing down. They're talking about unemployment going up, people losing their jobs. So people that do have jobs aren't making as much money. They're losing money due to inflation, but that's why they're trying to bring down inflation. So this is the pain that they were talking about, but it's not working because unemployment went down. So this means keep going aggressive, keep going aggressive, got to keep going aggressive. And if you look at how the market reacted today, it's not good. And now look at this. Apple's going for its low of day right as I'm speaking. It is almost 9:30 and the market is heading for its low of day. Um, but damn, who told you? Who told you? Who told you? I said it. I said Monday and Tuesday. Is this like not the most obvious bull trap ever? I mean, what? The market jumped up 6% in 2 days for literally no reason, and we were already giving all that back by the end of the week. So this is why you don't FOMO. You don't think the bottom, you missed it. You got to look at the macro situation. You got to look at what the Fed's doing. What is the Fed saying? Not what the media's saying. I mean, it's like the media and the hedge funds are in cahoots. The media's out here being like, "Hey, Fed's talking about a pivot," and then it's like, "What? Who? No, literally no one on the Fed is talking about a pivot." But the media's just like, "Oh yeah, they're thinking about it." Just like it's like they're stoking FOMO. It's crazy. It's like they were trying to get people to FOMO into the market. It didn't make any sense, and it was pretty insidious. And now we are obviously doing the opposite. So that's the market we're in. Good news is bad news because the market wants to see what the Fed is doing, but it wants to see it working. It wants to see the attempts that the Fed is taking to slow down inflation. They have to see that actually work. And when you see unemployment go down, that means it's not working. That means they still have to keep going, still have to keep pounding rate hikes, and that is just not good. Not good for the market. Super aggressive. Things are looking like they're gonna start breaking. But that's the thing. That's the Fed knows that if drastic things start to break, if big things happen, certain things go bankrupt, that they can wake up, flip the money printer switch to on, and just re-stimulate. So they know that, and I don't think a lot of people realize that. It's a very slow process doing the opposite of stimulation, of destimulating. It's very slow. It takes a long time because these rate hikes take a while to get into to get on these companies' spreadsheets. The difference shows up, but they can instantly stimulate the economy. Which, if we just need to do a little history lesson on that, it'd take us about 5 seconds to see what I'm talking about. Back here in March of 2020, they did exactly that. Market was crashing, things were breaking, bond market's breaking. They woke up and they said, hey, we can print $3 trillion and pump it into the bond market overnight. And they did that. So they know that, and they are just going to keep pushing, keep pushing, keep pushing until things break. They're going to push too hard. They're going to overdo it, and we know that because they're always wrong. So the market is feeling the pain of that, and as you can see, we are dumping. So this is what I was talking about. I said if you're buying puts, the market is going to be very volatile. There's going to be a lot of games played. Buy your puts months ahead of time, months out of the money. Or if you're getting out of the money puts, especially, get them. You gotta buy the months. You gotta pay for the time. So that's why I paid for the time on my SPY put. It is almost, yeah. I'm hardly even red on it. We're getting pretty close to being green. Actually, it's kind of crazy. But I have that SPY put for the 22nd or 18th of November, and then I just opened a Apple $130 put 16th of December. So I'm giving myself a lot of time on that because I know some crazy stuff can happen. We get a crazy good CPI number, and then the market goes back up. But then FOMC in November could just yank it back down. I could honestly see that being a very likely scenario where we do get a lower inflation number, but then we know oil prices are going back up. So not this CPI read, but the one after this for the month of October, the one that comes out in November that says October inflation will probably show elevated because gas prices have skyrocketed. So this is what I'm talking about. Let's look at the VIX. VIX is breaking out of that bull flag I told you guys about. I said, look at this. VIX is making a bull flag, guys. Don't get fooled. VIX breaking out of it perfectly. That's playing out. The dollar, look at this, guys. I told you. Look, the dollar is in this channel. It's in this channel. Where'd it bounce? Almost right off the bottom. It's bouncing. The dollar going up is super bearish. Let's take a look at SPX, though. So SPX, I told you guys about this critical level, and that is right where we closed at. We were just barely holding on to it by a thread, but we got the system sell signal. We got a closed 30-minute candle below the 50 simple moving average on the 30-minute chart, and that's the clear sell signal. And now we broke this level, we broke this next level at open, and now we're just in free fall. We could see a bounce right here at 36.50. But yeah, market's just, it's a sell day. It's a big sell day. This isn't, no buying calls today. Um, and the fact that it's Friday on top of that, terrible news on a Friday going into an uncertain weekend. This could be a bloodbath by the end of the day. We'll see if anything crazy happens. I might upload a video about it if something crazy happens. But looking over at the Nasdaq is even way more painful. Oh, I forgot. How long have I been recording? Yeah, only 11 minutes. AMD came out, and they're missing their earnings projections by like $1 billion. AMD, let's look at AMD. AMD is down probably 12% by now, 11%. AMD is flushing down the toilet and yanking all the semiconductors with it. This is going to be a painful quarter for semiconductors. I see a really nice short setup on Qualcomm. Qualcomm has been kind of bouncing like crazy. I mean, it bounced from 112 up here to like 126, and now we've broken out of this ascending wedge that we were in. Just picture perfect ascending wedge. We broke out yesterday, and now of course we're dumping, and now it's making like a perfect head and shoulders. What the hell? Intraday head and shoulders. Interesting. But that's a really nice short play. Not a financial advisor. But Nvidia down 7%. I mean, on semi is down 8% today. Micron down 2%. I mean, this is going to be a very, very, so that's ultimately why the Nasdaq is outperforming the S&P by a full percent to the downside, because semiconductors are just absolutely hemorrhaging right now. But looking at the weekly on the Nasdaq, we see our 200 week moving average. We are closing a candle below that, and we are getting an let's just jump over to this. We are getting a horrendous ugly weekly candle on the Nasdaq right now, or I just on the entire market basically. This disgusting monster wick to the upside. So that tells us the market tried to rip up, it got rejected, and now we are closing below where we opened last week, and that is a very clear continuation candle to the downside. Not good at all. And I imagine today is going to be a very high volume selling day. We were already getting close to about half the volume we achieved yesterday, with another like another 4.5 hours left on the day. I mean, this is gonna be a rough one today, folks, and it is panning out perfectly. So, congrats if you held puts through that pain. I know that was pain. Congrats if you bought puts like on the end of Tuesday or Wednesday, like that. You're smart. I did not. I only bought my put on last Friday, like towards the bottom. And I just held. I knew I got time. That's why you pay for the time. If I bought 2 week puts out for 340 on the S&P, those are done. But you bought the time, you paid for the time, you're still good. You still got plenty of room to make your money back on those. But that's basically what it's all about. I'm at the point where it's not a matter of if, it's a matter of when the market does continue to just completely crumble and we finally get that capitulation move to the downside. But the things we're seeing in semiconductors, I mean, geez Louise, have you ever seen a chart like this? AMD, it's like it gapped down from $67 to $64, and if the first thing you woke up and you grabbed a put, I mean, you're making a fortune. It has dropped another $4. So even if you miss that gap down, I mean, just craziness, absolutely crazy. Um, Hemorrhaging. We're gonna see AMD below $60 for the first time. This is just crazy. For the first time since, geez Louise, it's way over here, July of 2020. Just absolutely bonkers. We will probably bounce off of 58.60. Quote me on that, but this is just disgusting. Oh my gosh, look at this downtrend on AMD, just craziness. Nvidia same way. Nvidia also with a big ugly shooting star, trying to retake that 200 week moving average, just no luck. but Nvidia, I do see a support that Nvidia could bounce off of this trend line right here. So Nvidia could bounce at like 118, but as of right now, I would not be trying to fish a bottom in this market. Horrendous. So good news is bad news. Unemployment goes down, the market goes down with it. The market wants to see. So if you're confused, just it's as simple as this. The market wants to see what the Fed is doing. It wants to see that actually work. The market needs to see that the Fed is actually correct in its thesis and that what it is doing is going to actually help inflation. And we know the only way that they can stop inflation is by bringing down demand. The only way they can bring down demand is by making people lose their jobs, making job openings go down, making their wages go down, and that's unfortunately all they can do. And that's the pain. That's the pain that they were talking about. That's what Powell said. He said we're gonna feel pain, and this is what he's talking about. So good luck out there, folks. Not financial advice, but I'm looking at puts. I'm looking at puts, guys. I mean, we tried. The market tried, especially when you have a week like this, when you have this 2 days of just pure FOMO, like panic buying, and then just by the end of the week, it's all gone. Like, come on, guys. Come on. Come on. Don't get bullish. Take it easy. Pump the brakes. Don't get bullish at least until the end of the year. Anyways, guys, I'll catch you later. Peace.